Welcome back. If you are a returning user, probably you know that we have started a series on manufacturing and ERP. And if you're a new viewer, we have been doing this on multiple areas. For example, on personality development, and the first domain on manufacturing. We have a set of videos plus. There are things on entrepreneurship and business. And in the last video on manufacturing and ERP segment or that series, we discussed that how to set up a company or a shop floor. From that perspective, this video is relevant. And at the same time, this video in isolation is applicable for any type of business as well. So we have tomorrow, when you open up a medical practice, for example, or a sports center or a mall, it could be anything. Okay, so this topic, which I'm going to discuss in probably 3 or 4 parts, because it's slightly lengthy and it covers different areas. So this will be of value to you in both from manufacturing side as well as from setting up a business side. On the other hand, if you are a accounting person or a casting or that kind of a field, financial field, then and you are working for company, or maybe you wanting to set up a company. In both the cases, I hope this segment of the business, within quote business, is our playlist. So from that perspective, I hope it will help you. Now let's get on to that. What we have been discussing so far is that we have we are going to open up a company or a factory, and we got all the list of things to do. At that level we stopped, and now you need funds to even to buy a land, or to submit government proposals, or or buying equipments, or getting your employees or staff to work. And there are for so many things you would require money. So we are going to discuss that as part of this. And so from that perspective, how to raise funds. Very simple thing is that if you have enough funds to buy that, maybe millions of dollars or rupees or whatever it is. So if you have money, then source of fund is not the issue, but the procedures remain the same. So for now, let's assume that you are going to raise funds from external sources, and what are the ways by which you are going to raise funds. Obviously, the first one would be equity, and second one would be a debt. A third one in a combination of this, but the preference is for debt and with some equity, debt with equity, and in the fourth scenario, we have equity with debts. I'll tell you the small difference, how these the third and fourth one differs. So before we get on to that, what we are going to do now is that how or what are the critical factors that you need to consider before going in for funding. For all along, we are assuming that it is a greenfield implementation that we discussed. That now we will discuss separately. For now, you just take it as a greenfield implementation. In that case, you need the full amount of funding. If it is a brownfield or a bluefield kind of project, then you would have already raised some money in the past. That you have to remember. And you also need more money to do further operations. So we are going to discuss in general, without getting into specifics of green or blue or brown field. So the critical factors in any scenario you need to remember is this: what is the legitimacy of your company's existence? So that means you should have been properly, you should have got approval from the ministries or government authorities. In India, it is no Ministry of Corporate Affairs. Then you need to raise it from the tax department, income tax department. Maybe if your revenue is over a particular threshold as defined by the GST regime, then you need to get those taxation things in place. Then you if you are you are going to set up only in one country or in multiple countries, that you need to be very clear whether you are going to set up as a branch in multiple office or multiple countries, or in the or within the same country. So all those things you have to give importance at the very start of the project itself. Otherwise what will happen is that you will start doing as things come by. Then you are trying to build an animal with different legs and tails and trunks and body and eyes and nose from multiple animals. Then it won't be a single animal. Okay, so you will end up in a mess later. That is why I'm trying to kind of warn you at the start, so that when you do as per the procedure, correct things as defined or as people have experienced and sharing like me, who has given you that experience, follow that guideline. So the legitimacy of the company's existence, that need to be clear. It may be a private limited company or a proprietary or a partnership, whatever it is. Try to have registered with the authorities, government authorities. Then you need to have clear understanding of why you need the funding. So for that, maybe you need some proof, like, I'm going to buy a land, which means that you should be in a position to illustrate, from where, or how you are going to acquire the land, or from where you are going to acquire the land. So the land must be existing, right? Otherwise, it is fictitious and it's a forgery. So you need to have the, right land, and or land or office for that matter. Okay, so the office should be existing. That place should be a registered place in the your corporation or municipality or something like that. So that is a proof. Like that, for everything which precedes funding, you should have enough proof, and that proof should be towards the purpose of funding. Okay, you can't say that no, I have a shop floor and I'm going to develop a software. That may not go or gel well. So you need to have the right proof for your purpose. Obviously, in your ministry, you would have given the purpose of your running the business, like the article of association or memorandum of articles. You would have specified what all the objects you are going to do as part of this particular company. So funding should again align to that. Then you need to also know that from where you are going to get your customers and get your revenue. So you should have a revenue plan, as well as you should have a commercialization plan. That is very important, because people will try to have that now. Okay, I try to generate revenue. Okay, that is fine at the start, but you need to know how to commercialize certain things, and your product or services should enable to commercialize. Those things are very very touchy subjects, and in detail we need to discuss. But at this level, let's assume for now that you need to have a proper revenue source, which might include customer contracts, the validity of the contracts, or if it is a JV, then somebody has to give you their assets to you, and what you are going to offer to them. So you need to define all those sources very clearly. And once you have assume at this stage, you have to assume only, and everything is in order, and you are going to raise invoices, then to whom you will be raising the invoices, and what point in time you will be raising the invoices, which is also part of the commercialization in a sense. So for that, you need the action proofs. So you need to have, okay, by this time, when my product is in the warehouse, and when there is a when there is a letter of intent, or some, or or a particular order, then I will raise the shipment. I will raise my invoice, and with the way bill I will send the goods, like that. So for all that, you need to have a flow chart, or no, even a mental map at this stage is required, to say that no, at what point in time you will raise the invoice. Then you need to have a plan in a place for the taxations, pensions, and salaries of employees or staff. And of course, no, if you are going to get the loan, or if in case no, if you have already got the loan, even the director's contribution other than the equity is also treated as a loan in general. And that how are you going to repay? So when you are going to repay, you need to know how to repay the principal and how to repay the interest, and what is the horizon or duration over which you are going to repay. Then you need to have a clear revenue forecast, and at and maybe generally you need to have 3 to 5 years of forecast. And if again, that depends on whether you are into B2B segment or B2C segment, but generally you need to have minimum of 3 years forecast. Otherwise it will be very difficult for you to even do any business. And you need resources, right? You need a CEO, you need a COOs, you need chief sales officer, product officer. If you are into implementations, then projects, commissioning. There are so many individual streams. So you need to get those resources. That means you should have a mechanism by which how you are going to get these resources. Otherwise it will fail. And you need to prioritize which are the resources which are immediately required and over a period of time. And and when these resources get aligned to your business, when they become effective or productive on your job, then what happens is that now how your revenue performance is going to go up. Because when you are going to employ someone, you are going to incur the cost on day one, but your revenues won't come from day one. Okay, so that means you need to give sufficient amount of time till these people, these equipments, these assets produce something which can be really really shipped to your customer. So you need that kind of a plan. And with respect to complexities, if you look at what we have discussed so far is the critical factors. With respect to complexities, what you need to be careful at this stage is that when you are forming a company or when you are bringing in a shareholder to do all these things, what we discussed in the critical factors, you need to have a clear understanding of the shareholders agreement, for what and how they are bringing in the money, whether the money that is getting into the business is is not fraudulently taken in, so that you don't get into the problem or your company don't get into the problem. So you need to be clear. You have to declare the source of funds of all those people who are getting into the business, and how they gotten this money. So that is also important, right? So people getting money from other illegal sources. If they try to park in, then there are difficulties which you are going to face down the line when situations arise. So all these things government will anticipate as part of money laundering or anti money laundering procedures. Then you need to have all the statutory clearances, like for example the taxations, sewage related things, pollution related things, environment related things. If you are going to set up some refinery kind of a thing, then probably you need to get clearance from mines, mines controller, or controller of mines, on whatever way they call it. So all the statutory clearances you need to have. Then inwardly looking at what you need to be clear is that what is the line of business you are going to do, and what is the product mix. Each one is a topic by itself, again I remind you, but for now you just take it. Now what are the lines of business for each line of business, how you are going to apportion your cost, and including the resources for that matter, or human resources as well as your equipments or assets. Then you need to have a P&L. It can be even a mock P&L for or simulated P&L for the 3 years or 5 years period we discussed before. So in the same value, you need a balance sheet, The same value you need to have a book value and now evaluation of the company itself. And in case you have got uh, debts in the past, then how you are going to clear those debts? You need to have a clear strategy, because any money that is coming in, normally people won't allow the new money that is getting into the business won't should not be rather used for clearing the old debts, unless otherwise it is explicitly agreed in the shareholders agreement. So you need to have a strategy for clearing your past debts, and know how to go forward with the new business with the new money. The business need not be new basically, but with the new money, how much you are going to generate the revenue, you should be in a position to market. And from here on, this is how the effective use of new money is going to be. And in case of a new business, that is greenfield business, this issue may not be there. But in other scenarios, yeah, you need to be very careful about that. Then you should always plan or identify upfront what are all the risk for the investors, and what is the risk mitigation strategy. Also, you need to be, if possible, you need to project to the investors. Then, in case you have used the old money from previous investments or loans, it could be investment also. In this case, you need to have a clear proof of how how you utilize those money in the previous money. In case of blue and green field projects, so you need to demonstrate that how you utilize the old money and what is the return you got out of that old money investments. And were you able to repay the loan or repay the equity? And there should be some proof, like it could be a banking transaction or supported with the invoices or a customer agreement on that. And all these things are simple in the sense that the complexities, real complexities, come into picture if you are going to have companies across geographies which are bound by different laws, which means that in India the laws are different, in Singapore the laws are different. I mean, the laws are different. In Europe it is different. In the Americas, it is different. So if you are going to form or fund resources, fund I mean companies, then you need to take into account of all these laws for every sections, from forming the company to taxations to labor laws, everything you need to go through. And it is definitely complex, okay, no doubt about it, definitely complex. And cross-border transactions are critically looked at by all the governments throughout the world, so that you don't get into the problem. And in that scenario, you need to have intercompany agreements. It's not just a shareholder agreement between company A in one country and company B in another country. You need to have a clear intercompany arrangements, which includes a memorandum of understanding, or it could be even the agreement in terms of how your resources or costs are going to be utilized, and how the revenues are going to be shared with. And in case the complexity compounds further, if you really follow that, if you are developing internal, I mean, sorry, IP, intellectual property, then how you apportion your weight on this intellectual property to each of these companies, and how you amortize all that. That's a new world for you guys. So, but at now, I mean, at this stage, you just assume that each company should have a appropriate intercompany rules. Then you need to work out all the financial ratios upfront, possibly by that 3 year 5 year period, including your liabilities, your assets, all the ratios. There are tons of ratios there. And for each of these companies, you need to work out. And if you are going to have obviously across the country, if in particular, it is going to have a multiple currency, right? You may be doing it in rupees or dollars or euros or ringgits. It is going to be different currencies. So you need to know what is your base currency for each of the country, and group reporting. So and then it is going to be different, right? The exchange rates are very different, on each day. Within the day itself, it is different. So when you raise the invoice, when the service was done, all the exchange rates, fluctuations you need to consider in mind. And still, every company would, or company shareholders or the board, within quote, the board of each company would expect statutory compliance in on all aspects of each of these companies. So this is just the complexity. We will get into each of these topics on equity, debt, equity with debt, or debt with equity. With this in mind, we will get into the discussion in the upcoming videos. Stay tuned for the the subsequent parts. Thank you very much for watching this. I know this is a very heavy subject, but if you are going to be an entrepreneur, or in the finance, or doing business on dealing with money in that sense, obviously I would suggest you learn this. Thank you for watching, and have a nice day. Cheers. This is Gokul for Business Doctor. Thank you.